OPEC Plus boosts oil production, a strategic move amid global economic recovery and energy politics by international trade talk. In a significant policy shift, OPEC Plus has announced an increase of 548,000 barrels per day BPD in oil production for August 2025. This decision comes at a time when global energy inventories are tightening and the world economy appears to be regaining momentum. While the move may appear to be a response to supply-demand imbalances, it also carries deep political, economic, and strategic implications. Global energy demand and OPEC Plus's role. OPEC Plus has long positioned itself as a stabilizer of the global oil market, yet its decisions are often influenced more by economic interests and political pressures than by market fundamentals alone. During the COVID-19 pandemic, the alliance drastically reduced output to support prices. Now, as economies reopen and energy demand surges, OPEC is seeking to reclaim market share and ensure it maintains influence over oil pricing dynamics. Impact on oil prices. At first glance, the production hike seems to be aimed at easing crude oil prices, offering relief to major oil-consuming nations, especially Western economies. However, past experience suggests that even significant production increases from OPEC Plus have failed to lower prices substantially. Geopolitical tensions, including the Russia-Ukraine conflict and instability in the Middle East, continue to exert upward pressure on global oil markets. The political undercurrent, U.S. versus OPEC+. The return of President Donald Trump to the White House has reignited pressure on oil-exporting nations to help control inflation by lowering energy costs. This output increase may, in part, reflect a diplomatic balancing act, an effort by OPEC Plus to ease tensions with the U.S. and maintain a cooperative, if cautious, relationship with the West. Profit motives and strategic competition. Another critical factor behind the decision is the ongoing competition between OPEC Plus and U.S. shale producers. If oil prices fall to low, it threatens OPEC revenues. But if they rise to high, American shale oil becomes more competitive, potentially undermining OPEC dominance. The 548,000 BPD increase is a calculated move enough to signal goodwill and stabilize prices without jeopardizing OPEC's strategic position. What's next? OPEC Plus is expected to meet again on August 3, 2025, to review production strategy for September. If demand from major consumers like China and India continues to rise, additional output increases are likely. However, any future changes will also depend on political developments, economic indicators, and inventory data.